Welcome back, everyone. Michael here with Offshore Citizen. Today I'm going to update you a little bit about some recent activities with the Puerto Rican-based bank Euro Pacific, which is owned by Peter Schiff. Now, if you may recall, if you followed this channel for quite some period of time, you'll remember, I don't know what it was, maybe a year and a half ago, something like that, I talked about something called Operation Atlantis, which was this coordinated effort by, I believe it was 5 different countries to investigate, suspected, alleged, something like that, tax evasion, money laundering charges towards via customers of Euro Pacific. And it is worth noting that there has been nothing come back in that regard. At the time, I did mention that actually the compliance standards at Euro Pacific, in my experience, speaking from the perspective of a customer and people who we've worked with for a variety of clients, were quite high, not just on the onboarding, but actually on the ongoing transactions, to the point of actually being quite annoying. Now, since that time, I guess it was maybe 6 months, a year ago, the bank lost their US dollar transfer facilities, so their correspondent banking abilities, and so you'd have to deal with other currencies. Now, I have talked over the last quite some time, one of the areas we help people with quite a bit is with doing international banking, right? Finding the right banking relationships, getting accounts set up, understanding where the best place to hold your funds are, what the risks are of those institutions, etc. And I've talked about how this is an increasingly challenging process, meaning that banks are just harder and harder to deal with. They are more and more ridiculous in terms of their standards, in terms of their onboarding, etc. I've advocated that, in my opinion, actually, because of the way the modern world works, that the right to have a bank account, to hold money, to send and to receive money, should be enshrined as a basic right within the constitution of all these different countries. Mainly because of the fact that if somebody can't get a bank account and can't transact, how can they survive, right? Now, you'll get some degree to which, maybe somebody says, okay, well, we're going to give it to the individual, but not the business. But in reality, increasingly, what's the point, and how do you have a free functioning economy with plurality of different businesses competing in the marketplace if they can't get banking, right? And when you lay these barriers on top of them, what do? You incentivize large companies over small companies, much like how regulations are used very frequently. I'm here in Alberta today, and so you have an oil field industry. Well, what's one of the things that's happened there? They brought in environmental and safety regulations, both of which are incredibly punitive to small businesses because the cost borne is disproportionate on percentage terms. In other words, if you make $1 million, then if you have to pay $20,000 for some sort of a core certification, ISNet World, etc. sort of setup, then that's going to be way, way, way bigger as a cost for you to bear than a $10 million company, or let alone a $100 million company, and so on. So the same principle applies when we're talking about transactional friction in banking. Now, to be fair, people who have more money are being affected by the banking restrictions maybe as much or more than kind of just basic retail people. At least businesses up to, 9 figures, in my experience, are being affected by these banking problems. Maybe, big companies like Apple, public companies, etc., may not have these issues, but broadly, I see it being quite a concern. And then you've got what I've mentioned in some previous cases, which is restrictions where certain industries basically can't get banking, can't get payment processing, not for any regulatory reasons, not for any legal reasons, etc., but purely for optical reasons. And what happens then is you might say, okay, well, doesn't that create an opportunity for individual banks to compete and to collect business? Well, the problem with this is that banks need to function within a network, and they can be ostracized by the network. So I'll give you an example of this. I talked to the CEO of a bank a little while back, maybe a year or so ago, and he was discussing a little bit about how there was a company who was from the adult industry, and they were saying, hey, listen, they won't accept them, nobody will accept them, sort of thing. It's like, well, why not? he said, listen, I agree with you entirely, Michael, that, should be fair. There's nothing illegal about this. There's no problems, etc. It's got a good, strong history. There isn't a history of, chargebacks. There isn't a history of illicit transactions. Everything is upfront, etc. But if I accept this, then it's going to cause a problem with the other banks who I deal with. And so the free market system ends up not working very well. So in an environment like this, a bank like Euro Pacific has been actually quite instrumental in facilitating banking for a bunch of companies or individuals who would otherwise have a pretty hard time getting banking relationships. Now, fast forward to this last week, and the regulators have issued orders to have the bank frozen, shut down essentially, they've issued some fines for them, etc. And this has issued driven a flurry of tweets from Peter Schiff complaining about this. I think he's got a lot of legitimate points in the sense that there's supposed to be this concept of innocent until proven guilty. Of course, we know that what happens is the media will condemn you publicly first, and it doesn't matter whether you're innocent. There won't be some retraction, or if it is, it's page 5 or something like that. And so this is not really very good structurally, socially. I've invited Peter to come on to the show if we want to have a conversation about it, hear his perspective. So we'll see what he decides. Maybe he'll come, maybe he won't. But I do think that this represents an important thing to understand for anyone who is banking, to realize what is the kind of current environment and what does this mean in terms of your banking, it's not like your money security. Like, okay, the chances probably that people would lose money in this are fairly low, assuming that, as they state, Euro Pacific maintains full reserves, etc. So in theory, there actually shouldn't be customer funds lost directly, but imagine if your funds are stuck in the bank and the bank is now shut down, and you may take 6 months or more to have your funds unfrozen and be able to get the money back. And you've got these interlocking entities that have to be dealt with. You have a regulator who has a problem, then maybe the regulator says, hey, okay, we're going to allow X, Y, Z to happen, but maybe now the correspondent bank causes problems, et cetera, et cetera. So you have this cascading set of consequences that can cause issues, much like happened with Tesla and lockdowns, right? So in other words, you had bigger regulators saying, hey, listen, there's no problem, but you have all these different regulators in between, and somebody happens to say, oh, well, they might have said it, but we aren't sure about it yet, and it's problematic, and it led to Elon Musk saying he was going to open up the factory regardless, and he'd be there to work, and if they didn't like it, they could come and arrest him, sort of thing. So, it's really pretty sad and disturbing that we are at this situation in society where things don't work so well. And this is arguably, in my opinion, an extreme reason why we want neutral infrastructure. Okay, neutral infrastructure is really, really important. What do I mean by that? Well, a good example is the decentralized infrastructure that runs crypto. So I actually replied to one of Peter's tweets saying something to the effect that, I know he's very notably anti-Bitcoin in terms of the Bitcoin price, and we'll see what happens in terms of the Bitcoin price over time. But whether you like it from a pricing standpoint, as a payment rails process, which is permissionless and can't be interfered with, etc., it's decentralized, I think it serves a really, really important function in society, because barring something really severe in terms of regulatory changes, in terms of kind of pushing for the rights of having banking, again, just keeping in mind, we're not living in the world that we were 200 years ago, right? 200 years ago, you could live without a bank, no problem, because you can transact all in cash or whatever, no problems. The problem today is that most of the business that takes place digitally. And if somebody deprives you of that, they're severely harming you. They're severely repressing. It's essentially like a condemnation to poverty is kind of what you could probably say. In fact, you probably can't even get benefits from the government if you're somebody who is unbanked. And so some people might say, okay, well, great, this is a good reason to put in better payment rails or something like central bank digital currencies. What's the problem with that? The problem with that is that you no longer have a competitive environment in which if one player in the market is, that is to say the central bank, is serving the market well, then that's to say isn't serve the market well, then you end up in a situation where people can't go anywhere else. There is no other option. It's a monopolistic system. And the whole premise is that we can get better by having several competing options. I would argue they should be several competing neutral options that don't discriminate based on what business somebody's doing, where somebody's from, who that person is, what person's background is, etc., because it's just become that essential to the function of society. So just quickly, what apparently happened is that the bank stated that there was insufficient bank capital that had been posted. Now, just so that you understand, there's this common misconception that people have, I've mentioned it in some other videos, between something like bank reserves, right, which is the actual funds that are basically held on deposit, and bank capital. Bank capital cannot be increased through amount of of depositor money. Okay, so bank capital is essentially retained earnings plus shareholder equity. So basically the money that shareholders have put into the company. And so according to Peter, there was a few million extra that needed to be posted, that he was in the process of selling the bank, and that he had had an offer that was considered to be reasonable, that the buyer was qualified, it was a credible offer, the buyer was willing to post sufficient capital in order to shore up the bank, but that there was some issues with the terms that the regulators had, so they blocked the sale, and then as a result, essentially without kind of properly informing them. And now, how that happened, hard to say, right? We can get into that. We can discuss it with Peter if he wants to come on. But there was insufficient bank capital, and so they said, hey, listen, we're going to close you and we're going to fine you. So, I mean, look, having bank capital requirements, I don't think is particularly a bad thing. You want there to be a sufficient skin in the game environment where people put up money in order to facilitate all the different things that are necessary for a bank. You definitely don't want a situation where somebody can just go and open a bank with $100,000 and then who knows what happens. So having some sort of a minimum is not a bad idea, and having a fairly large minimum, given the fact that you're going to be holding hundreds of millions, billions, whatever, of customer deposits, is also not unreasonable. How kind of that process works and how transparent it is, and what the to and fro's are on it is a whole other question. And I mean, I've worked with people in the past who wanted to start banks and gone through some of the complexities. It's not an easy business at all. It's a terrible business. It's extremely expensive. It's extremely wasteful if you think about the overhead that you need in order to comply with regulations, comply with AML, with KYC, all of which I've mentioned before do very little, if nothing, to actually prevent things like money laundering. It's kind of the statistics, first of all, there's no accountability on these. Like, nobody is measuring, hey, listen, are these measures effective? And more importantly, are they efficient in their effectiveness? Meaning that the amount that we have to spend, the pain that we subject literally billions of people on the planet to with respect to these regulations, what is the ROI we're getting from that? And it turns out the ROI is negative by a factor of about 99%, according to the only studies that I can find, which is pretty miserable, right? And yet they just persist with adding more and more to this. And there's this concept that people are terrified to oppose, which is that, if you talk to regulators, if you talk to governments, if you talk to institutions, of course, money laundering, we can't have money laundering, etc. And I would argue that money laundering is largely a boogeyman. You're in the sense that either it's not as bad as people would think, and you can just kind of go back and look, hey, listen, 20 years ago we didn't have all these regulations. Were things so bad? Are things so much better now than they were 20 years ago, now that we have all these regulations? I certainly can't see strong evidence of that. And even if they are, is it worth the price that is paid? So anyway, that's a whole other conversation to get into. But I think for you as a depositor, it is really, really important to choose good financial institutions. And this is one of the cases where, unfortunately, there's going to be a bunch of people whose accounts are frozen, and that could really inhibit their business, could inhibit their personal life, their ability to do transactions. Who knows? A lot of people might rely strictly on that one bank, and now they could be could be in a really tough spot. It's one of the reasons, one of the key pieces of advice I always give to people is do not open a single bank account. I sometimes talk to clients and we're working with them and opening up 2 or 3 bank accounts. And they'll say, oh, I only need one. And I'm like, listen, you will not understand the wisdom of this until it is too late. You absolutely want a minimum of 2 bank accounts, because if there's a problem, you can have a backup. Otherwise, it could take you 2, 3, 4, 5, 6 months to get a new account, and you're going to be panicking when you shouldn't be, and just because the bank has some weird policy or a regulator comes down on them, etc. So very, very important. Choose good financial institutions. If you want help, please reach out to us. You can book a call, calendly.com/Michael-Rosmer, link in the description below, or send a message to our website, it's offshorecitizen.net, offshorecapitalist.com. And then number 2, make sure you always have at least 2 for every business. And for you personally, I would prefer that you'd have probably 3 or more. And sometimes you want diversification between geographies and all that kind of thing. It is worth it to have backups. It's relatively cheap insurance. If you think that maybe account management fees are, I don't know, $20 a month, $10 a month, $50 a month, whatever, the insurance cost of that is insanely low for what the difference it could make in the operations of your business. And then make sure that the banks that you're getting have as few vulnerabilities as possible to this sort of thing. So anyway, I hope that kind of informs you a little bit about what is going on with Euro Pacific Bank, some of the concerns that could show up at various different banks, the kind of direction of how things are becoming harder and harder due to this insane amount of regulations. And it's one reason maybe to stay away from something like US dollars. A lot of the banks in Europe now don't support US dollars, they're only supporting euros, which again is a testament to the policies which are basically driving people away from the US dollar and will kind of erode US dollar supremacy as a global reserve currency. And then you can ask, well, what else are you going to do? Well, it's interesting that something like Hong Kong dollars or dirhams are essentially stable coins, right? So we talk about in crypto, you have this idea of a token that's issued which is backed by reserves of the underlying asset or something similar, and then it's running on separate payment rails. So you have USDT, USDC, etc. Well, if you have something like Hong Kong dollars, that's effectively the same thing. You have a peg to the US dollar. There's certain ability to redeem that, but it's running on Hong Kong payment rails. You're running on UAE payment rails. And that can kind of facilitate some sort of easier transactions in certain cases, although it comes at the added cost of currency conversions, etc. So anyway, those are some thoughts. Let me know what you guys think in the comments below, and I will look forward to seeing you on the next video.